Hey, good evening, everyone. Welcome back to the channel. So we had some fun in yesterday's video, had to address some things and clear some things up, hopefully. The video has been very well received, by the way. And thank you all again, for your support. And like I said, I think it was very clear where my stance is. And hopefully, for those of you that weren't clear, hopefully things are cleared up for you now. So, what I want to do in this video, and I haven't done this in a while, I want to actually go over where we are and all the YieldMax funds versus the underlying. And let's just go over the facts. We're going to go over the actual numbers, which numbers don't lie, as the saying goes. And we're going to see where we actually end up. So, this is going to be kind of informal. Let's start with the actual YieldMax site over here. And let's do a reminder of all the YieldMax funds we have now because we have so many new ones that have been released. So if we go over here, we have Tesla, Aptly, AMZY, GUI, NFLY, MSFO, JPMO, PP, MRNY, MSTY, GDXY, ABNY, TSMY, Babo, SNOY, YBIT, AYYY, SQY, AMDY, XOMO, DISO, Coney, FBY, NVDY, OARK, and then we've got Ulti, and then we've got short funds, now four of them, Crash, Fiat, Dips, YQQQ, and then last but not least, we've got YMAX. We've got YMAX, and then there's YMAG. Okay, so let's do this first. I'm going to use Seeking Alpha again. I know there's been some better sites mentioned in the Discord. If you guys happen to have those handy, I'd be glad to go over those. Because I know some of you all weren't actually happy with Seeking Alpha. Let me see if this works a little better here. My screen looks a little small. Here we go. Okay, so let's try this. So greetings, Richard King. Oh, that's cool. It like bumps me up. So I can either do that or this. I'll stick with this for now. Okay, so let's do this. Let's go to Seeking Alpha. And let's type in, start with Tesla, our favorite one. So Tesla over 1 year is down 58.5% over the life of the fund. We are down. So the adjusted price on a post-split basis, $40.08. We have dropped all the way down to $12. Now, being $12, if this drops another 20%, this would be down to $10 a share, which would mean it's likely going to trigger a reverse split. Now, that statement in and of itself, um, I want to clarify this. So, as investors, there's a lot of people that are buying into yield max funds and high dividend funds that have an emotional attachment to these funds. Um, so there's my belief. I'm not telling you all what to do, but my belief is that emotion has to be taken out of investing. So, with that being said, Tesla, I just said it's headed for another reverse split. That's not an anti-yield max comment. That's not an, anti-J comment or anything like that. That's just stating the facts that, if we get another $2.17 lower, we're likely going to be seeing another reverse split. And we did talk about reverse splits with Jay the last time he was on the channel. Um, so like they say, reverse splits, they say nothing changes. You get half the shares. And what happens over time, you see what's happened. We've gone from 40 on a cost basis to 12.17. So if you have multiple reverse splits, you actually, in a sense, you're losing shares. And when the NAV declines, it's bad because you're losing the majority of your investment over time. I've illustrated that in prior videos before. So it's rated as a sell and a strong sell, but let's chart it and compare it to Tesla. La Tesla stock, which Tesla has absolutely sucked as an investment the last couple of years. So I can get the logic of Jay and company launching this fund because you think that Tesla is going to keep rolling like it was for 3 years. Imagine, like I say, and I've been saying this for a while, imagine if Tesla was launched in like mid 2020. The total returns would be phenomenal, but it wasn't. Now, there was a point, if we go back to 2023, this is where I first got sold on Tesla. If we look in like February, March of 2023, it had like a 3-month period where they tracked almost identically. And me as an investor, I actually went nuts because I'm like, if this can track with Tesla's performance and pay a massive dividend, then I'm all in. So that's why I got into a lot of shares of Tesla. Now, like I've said many times before, full disclosure, I am holding the bag on Tesla. I'm very stubborn as an investor. Um, and so I hold the bag, but I still happen to be getting. Oh, here's one of my favorite people, Robert Smith. So, how are you feeling? Are you still as bullish on Tesla as you have been? You're buying more, 3,500 dividends in the morning. Nice. Um, how will this impact Tyreek Hill's legacy? Well, clearly it's directly correlated. Uh, I will never buy all at once every 3 months. Well, if I do dividend reinvesting, I actually try to time it um, on my own timing. I don't do like the drip program. Okay, so let's look here. So unfortunately, Tesla has performed abysmally as an investment versus Tesla, which is down 16% over the same time frame. Of course, this isn't quite an apples to apples comparison. We need to go to the calendar and actually look at 2022 November 23rd versus where we are today, which is we're already in the month of September. We're well into September now. Um, oops, wrong month. Let's see here. 2024, September. There we go. Why is it showing me August? Why is it showing me August? That's strange. Very strange. Anyway, so it's not far off. You can see the wide disparity between the two, and it keeps growing wider and wider. Um, over this time frame, Tesla is up 16%. Tesla is down 65.72%. So again, I'm just reporting the facts. I'm not making an interpretation, but it is a factual statement that the underlying investment in terms of price return is better. Now, though, let's look at total return. So total return is here. Um, and it's a lot better with the dividends. The total return, Tesla is down 5% basically, while Tesla's up 16.38%. Tesla has maintained a phenomenal dividend, not going to lie, which, it's a covered call premium. It's not a true dividend in the sense of like Altria or AT&T, Verizon, or companies like that. Um, it's a synthetic covered call premium payout. So it's down 5%. Tesla stock over the same time horizon is up 16.38%. So it is a factual statement in this case that the underlying stock is outperforming the YieldMax investment. Okay. Now, if we look at year to date, same thing. Tesla's slightly outperforming in terms of total return. Same thing with 1 year. Tesla's slightly outperforming Tesla. So what I'm gonna do in this one, I'm actually, because this would be like a forever, hour-long video. Um, and I don't have like all day, unfortunately, to dedicate to my YouTube channel, like some other channels seem to. So I'll just stick to, I'm going to do a few funds. I'm going to pick the NVDA stock versus NVDA YieldMax ETF as my next one. So if we look at NVDA, this is on the opposite end of the spectrum. This is what can happen when the underlying does really well. Okay, so take this one out and we're going to focus on two funds. So we're going to look at NVIDIA stock versus NVDY. So you'll notice I've got it defaulted to total return. Over the past year, in terms of total return, the YieldMax investment with total return has performed 76.64%, which is a phenomenal return. Anybody would take this return anytime. But, and again, I'm pointing out facts, NVIDIA stock, which is a growth stock, which doesn't pay that much of a dividend, has performed much better in terms of total return. And like I say, our crown jewel as investors is total return. So you've got 76, 86, 96, 106, 116. So it's like 42% better 42% makes a big difference. You start doing the math on 10,000, on 50,000, on 100,000, 42%, that's dollars. So you want to be, as an investor, you want to be as good as possible. That's what I strive for. Not gonna lie, I'd be totally happy with the 77% return, but the underlying did outperform the yield max fund. And that is the point I'm trying to convey when I got labeled as a yield max hater. Um, the people that are saying that are making an emotional argument. You can't be emotionally tied to your investments. Investing anything with money, it's like business. Emotion, unfortunately, shouldn't play a role other than the euphoria of crushing it in terms of investment returns. But no, in all seriousness, emotion should not play a role. You're investing, it's like business. You're trying to make the most amount of money possible. You're trying to do the best for your bottom line that you can, right? Okay, so then if we look year to date, we're going to see the same thing. NVDY, 68.92% versus NVIDIA stock, which is ahead of it still. If we look at 6 months, we see that's getting closer over the shorter time horizon. In some ways, they actually track very closely. It's very rare for one of these to outperform the underlying, but it does happen. You can see 1 month where they're both down. NVDY, you're down 9% versus 1%. That makes a big difference. When you think about dollars and cents and all that, like it's not a game. I mean, investing's not a game, it's a serious business. So you can see the same theme again here. So I want to focus on just a few of those. The next one we're going to do, this is probably going to be a more extreme example along the lines of NVIDIA, but we're going to look at MSTR versus MSTY. So MSTY here, MSTR here. And I can already tell you, I'm not clairvoyant, but the same thing is going to be the case. Okay. So in terms of total return, um, let's do apples to apples here. So let's go to February 22nd when these debuted. So we're going to look at February 22nd of 2024. And then we're going to go to present day. I don't know why it's defaulting to the 26th, but anyway, that was like 10 days ago or 12 days ago. So what do we see? Over the life of both funds, we have MSTY, which again has a phenomenal 84% return. This is yield max just in 1 year. 84% is a phenomenal return, okay? But its underlying MSTR has 106% total return. So what do I say? Like if you're a new investor and you're starting like with zero and you're looking for some income and you want to invest in a fund that's going to produce income for you, I can see you buying like an MSTY and then using those dividends to wheel into the underlying. That's what I've been saying for a while. Use I call it the dividend wheel strategy into growth stocks. So MSTR has 106% rate of return, which is 22% higher, even though, like I say, we're crushing it. 84% is phenomenal, but when you can have that much better return, these types of things over the long run differentiate rich from poor. So that type of a difference in return is a big, big deal. Okay, the working investor says eye-opening. That's good. That's what I'm here to do. That comment honestly makes my day. That's what I'm here to do. I don't want to mislead. I don't want to run a risky strategy and max out my margin and mislead people into the abyss. I am a big fan of investing with your own assets, working, grinding it out 5 years, 3 years, whatever you have to do, saving money, using your own money. When you're independent of debt, it makes a huge difference in life. And that's what I want for you all, you know. Let's see here. Fun guy. I see you on. You kind of make the rounds, it looks like. Why do people think they can't sell some of the investment to get income as opposed to? Thank you. Thank you so much. Because this is called taking your own dividend, by the way. And I've said this before. And when I say this, I'm reporting factual information. I'm not trying to steer you all towards yield max or against yield max. I hold yield max. It's a personal choice of mine. I get income from these yield max funds, which I then use to wheel into growth stocks, which you all have seen me do with NVIDIA, with Chipotle, MSTR, so on and so forth. Okay, so fun guy here makes a great point. Um, absolutely, and it's actually better. you can take your own dividend. Like if you sell NVIDIA stock and you crushed it, you made like 200% returns. You sell part of that if you've held it over a year, and then guess what? You're actually paying less tax. You're paying a long-term capital gains rate instead of a short-term capital gains rate or ordinary income, and it's phenomenal. So those are three examples I wanted to go over here. Let me do a couple more comments here. If you're retired on one income, which would you choose, the options ETF or the underlying? I would probably choose 50-50. And honestly, retirement's not all it's cracked up to be. Start making money. I like the lean fire. Lean fire is my definition of retirement. Let's see. Yep, use the wheel fund, my dividends buy Tesla, Nvidia, also pay my mortgage and my trip to Greece. Hey, that's awesome. That's a winning mindset for sure. Can't sleep waiting my dividends. They'll be here soon. Tesla, PP, and Fiat is on my buy order tomorrow. That's awesome. Thought it was common knowledge that options ETD always underperform. You would think it is, but when I point it out, somehow I get labeled as anti-yield max. So again, that's what happens when you make an emotional argument and when you're emotionally tied to these funds. But anyway, that's pretty much all I wanted to cover tonight. Thank you all so much for tuning in. Like, comment, and subscribe, and join Discord, and we will see you all tomorrow. Good night. Bye.